So now let's look at the gold to silver ratio. I'm going to now teach you how to use ratio charts a little bit better to take advantage of these arbitrages. All right. So I have these blue lines are the 40-year interest rate cycles that I told you about, right? So 1940, interest rates inclined. 1980, interest rates declined. 2020, we started interest rate incline environment. You can see a correlation between gold and silver during these times. It's not a perfect one-on-one correlation, but there is some correlation to interest rates here. All right, so at this point right here in 1940, gold was expensive when measured in silver, okay? It took 98 ounces of silver to buy 1 ounce of gold. Here at the bottom in 1968, or let's start it with the start of the commodity super cycle in 1970. So right here, 1970, right here, it took 18 ounces of silver to buy an ounce of gold, right? Here at the peak, it took 104 ounces of silver to buy an ounce of gold. That ratio has bounced up and down. As you can see, we are approaching resistance in this ratio of the price of gold to silver. It goes back basically to 1973, right? Gold is becoming less expensive when priced in silver. Silver is becoming more expensive when priced in gold. I would argue that we are silver still has room to go, and that silver will become, will probably still outperform gold for a couple year period. But we have a couple different possibilities here. So this bottom line could form some resistance. The ratio of gold to silver may drop into the 40 range. Okay, if it does, right here, see what this chart does. If it consolidates and breaks downward, the time to buy gold has not yet occurred. But if it breaks upward, the time to sell silver and buy gold will have occurred. But if we repeat the scenario of World War II, which is fairly likely due to the interest rate regime shift that I just proved to you all, we could return to the absolute bottom of this ratio of gold to silver, meaning that back here in 1968, it took only 14 ounces of silver to buy an ounce of gold. That is life-changing wealth. If the same were to occur right here, you would see silver in the thousands of dollars per ounce price, not the hundreds of dollars per ounce price. So again, when capital begins to rotate between gold and silver, you can see it, all right? Learn technical analysis, draw these trend lines. I knew it was time to switch from holding gold. Okay, this chart told me from right here in 2011, gold was beating silver. Okay, we had a little bit of period where silver outperformed gold, but it bounced around in a range until I broke below some defined resistance. I didn't know for sure capital had rotated. Well, in 2025, in October, capital rotated from gold to silver, or from other assets to silver, and silver began outperforming gold. So from 2017 through here, I was accumulating silver. Now, most of my silver I accumulated way back here, but I would have done pretty close to just as well accumulating literally up till 2025. The data same is not true. I won't do nearly as well. So you missed the short-term vote. But like I said, things go up and down. I'm expecting that silver to gold ratio will probably approach this line, bounce up to this one. Here, I would begin buying silver in mass again because it's going to bounce back down and continue downward. All right.